That 5-cent fuel cut? That was a bribe. And you took it. While you were smiling at the pump, Woolies raised prices on 214 products. Your rent went up. Your power bill jumped again. You didn't get relief. You got a magic trick. The average Australian is $1,400 behind, not because they're bad with money, because the game is rigged to look fair while it isn't. My name is Rue. I've got 5 legal moves that take that money back, and you've got 90 days before July 1st to use them. Done playing? Stay with me. Let's go. Disclaimer. Before we dive in, a quick heads up. I'm Rue, and I'm not a financial advisor. Everything here is for education and entertainment only. Always do your own research before moving your cash. Now, let's talk about why you feel broke even with a full tank of fuel. Okay. Move 1, and this one alone could put over $2,000 back in your pocket every single year. Supermarkets use something called dynamic pricing. It sounds fancy, but here's what it actually means. They track your shopping habits, they know what you buy every week, and they slowly increase the price on those exact items because they know you'll pay. You're not imagining it. It's real and it's legal. But here's the cheat code. Stop using your debit card at the checkout. Instead, buy gift cards first, before you even walk into the store. If you're with Bupa, NRMA, or most unions, you can get gift cards at 4 to 5% off instantly. That's free money before you've touched a single item. Now, combine that with Everyday Rewards Extra. That gives you 10% off your biggest shop of the month. One shop. Use it on your largest weekly spend. Then open ShopBack, it's a free cashback app, and activate the Kohl's or Woolworths offer before you use your gift card online. That's an extra 2 to 5% back. Let's do the math together. Say you spend $150 a week on groceries. That's $7,800 a year. Apply 5% gift card discount, 10% everyday rewards on your biggest shop of the month, and 2% ShopBack cash back, and you're saving roughly $1,300 to $1,400 per year on the same groceries without changing what you buy. That's a return flight to Bali. That's 3 months of electricity. That's real money, and it costs you nothing except 10 minutes of setup. Important note, results vary, and not all of these stacks apply at exactly the same time. Check what's available to you before combining offers. Link to ShopBack is in the description below. Move 2, and this one makes most people angry once they find out. Energy companies in Australia charge loyal customers up to 20% more than new customers. Think about that. The longer you stay, the more you pay. They call it a loyalty tax, and most Australians are paying it right now without knowing. Here's the move. Go to Energy Made Easy. That's the government comparison site, energymadeeasy.gov.au, not the commercial ones that get paid to push certain providers. Compare your current plan against what's available today. Most people find they can save $300 to $600 a year just by switching. But here's the next level. Look for plans with wholesale pricing, also called time of use pricing. Between 10 a.m. and 2 p.m., when solar energy is flooding the grid from rooftop panels across Australia, the wholesale price of electricity often drops close to zero. With some providers, like Amber Electric, it can even go negative, meaning they actually credit your account to use power during those hours. So, run your dishwasher at 11 a.m., set your washing machine on a timer, charge your devices during the solar window. These are small habit changes that can cut another $200 to $400 off your annual bill. Switch now and use my referral link in the description below for a $50 credit on sign-up with selected providers. Move 3, and this is the one most Australians completely ignore, even though it's sitting right there fully funded by the government. The Medicare stack. Let me walk you through it layer by layer. Layer 1. If you have any ongoing health condition, and this includes things like back pain, anxiety, asthma, or diabetes, ask your GP to set up a chronic disease management plan. This unlocks up to 5 Medicare rebated visits to specialists like physiotherapists, dietitians, or psychologists every single year. That's potentially $600 to $800 worth of healthcare, fully or heavily subsidized. Most GPs can set this up in a standard appointment. Layer 2. Your private health extras. Studies show that 40% of Australians with private health insurance never claim their full extras entitlements. Dental, optical, physio, chiro, it's all sitting there waiting for you. Log into your Health Fund app right now and check what you haven't claimed yet this year. Most extras reset on January 1st, so if you haven't used them, you're about to lose them. Layer 3, the private health insurance rebate. If your income is under $93,000 as a single or $186,000 as a family, the government automatically reduces your premium. If you haven't updated your income details with your fund lately, you might be paying more than you need. And the bonus move for anyone who had big medical bills this year, check the ATO website for the net medical expenses tax offset. Thresholds and eligibility change yearly, so check ato.gov.au for the current rules before June 30th. The Medicare stack won't make you rich overnight, but it's free money that's already yours, and most people never claim it. Move 4. And if you have a mortgage, this one is the most powerful thing on this entire list. First, no mortgage yet. That's okay. Bookmark this video because you'll need this move sooner than you think. For everyone else, listen carefully. Banks are posting record profits, and they're making that money from you. Here's how to take it back. Stop putting your extra cash in a savings account. After tax, a standard savings account at 4 to 5% gives you maybe 3% in real return. That's barely keeping up with inflation. Instead, move that money into your offset account. Here's why this changes everything. If your mortgage is 6%, every single dollar sitting in your offset account saves you 6% interest, completely tax-free. You don't pay income tax on that saving. That makes it the highest guaranteed return available to any Australian right now. Let me show you the numbers. Say you have a $500,000 mortgage over 30 years at 6%. If you put just $500 extra per month into your offset account instead of a savings account, you cut roughly 4 to 5 years off your mortgage. You save over $80,000 in interest on the same loan, without refinancing, without doing anything complicated. The link in the description below has a free offset calculator so you can run your own numbers. It takes 2 minutes, and most people are genuinely shocked at the result. Move 5, and the clock is ticking on this one. We are 90 days from June 30th. This is your exit ramp, that one moment each year when the tax system actually works in your favor if you know how to use it. Here's your 90-day checklist. 1. Prepay your income protection insurance before June 30th. The full premium is tax deductible. At the 32.5% tax bracket, a $1,200 premium costs you effectively $820. You're getting $390 back from the ATO. 2. Any equipment or tools you need for work, buy them now. Laptop, phone, work bag, home office chair, anything with a legitimate work purpose. Buy it now, claim it in your tax return in August. 3. Max out your concessional super contributions. The cap is $30,000 per year, including your employer's contributions. Every dollar you put in voluntarily is taxed at just 15% instead of your marginal rate. If you're on 32.5%, that's a 17.5-cent saving on every dollar. On a $5,000 voluntary contribution, that's $875 back. 4. If you're self-employed or have an ABN, prepay any business expenses you can before June 30th. Subscriptions, software, professional memberships. The key principle here is simple. A dollar spent before June 30th on something tax-deductible is worth 30 to 45 cents more than the same dollar spent in July. Don't wait until June 29th. Start the list this week. All right, 5 moves. Let's recap fast. Move 1. Gift card stacking for groceries, up to $1,400 a year back. Move 2. Switch energy providers and use the solar window. Save $400 to $1,000. Move 3. Claim your Medicare stack before the year resets. Move 4. Offset account over savings account. Cut years off your mortgage. Move 5. EOFY checklist. Buy it now, claim it in August. None of this is complicated. None of it is illegal.
It's just knowing where to look. I've linked all the tools, the $50 energy credits, and the bank calculators in the description below. Here's the challenge. If this video hits 1,000 likes, I'm releasing my personal expense tracker, completely free for everyone who follows this channel. Stop playing their game, start playing yours. I'm Rue. Your money, your rules. See you in the next one.